Welcome back to Cheddar Business. Adam Neumann will step down from WeWork's board for a $1.7 billion payout as part of a deal from SoftBank, according to the Wall Street Journal. The bailout plan puts WeWork's valuation under $8 billion, and SoftBank valued WeWork at $47 billion earlier this year. Joining us now to discuss all things WeWork is Joshua Franklin, M&A, IPO, and corporate finance correspondent at Reuters. Great to have you here with us today. What do we know about the SoftBank deal? What is the path forward at this point?
Well, basically, the WeWork board had two choices to make. They tasked JP Morgan with arranging a $5 billion debt package, and simultaneous to that, SoftBank was also putting together a package, and it now does seem like the WeWork board has decided to go with the SoftBank plan, obviously siding with their biggest investor there now. And this really does potentially buy WeWork some time now. There was this kind of question mark about what they were going to do for financing for the foreseeable future, and now they will have kind of $5 billion in debt financing backed by SoftBank to kind of turn the company around and try and knock it into shape to get it ready potentially for an IPO some point in the future.
What does it mean for Adam Neumann, founder and former CEO of this company?
Yeah, no, it's a dramatic turnaround for him, and we think just 3 months ago in the summer, he was planning to be, take this company public as CEO, chairman of the board, have 20-to-1 voting rights, and now, as we understand, if this SoftBank deal is completed, he's probably going to lose his board seat, step down as non-executive chairman as well, and instead going to move to a board advisor position. So it really is a dramatic, turn of fortunes for him. He is still, going to be cashing out a lot of money off the table with a sale of his shares. But certainly, it does, you'd think, perhaps leave him free to pursue any other opportunities. Because it does seem like he'll be having less of a hands-on role with WeWork going forward.
You mentioned an IPO potentially still. Is that even in the cards for the company? What is it going to take to turn around investor sentiment with all of this information, all of this backlash that has been coming out?
Yeah, and I think that's why they're trying to kind of separate themselves from the past management of the company as much as possible, just to try and really, when they do eventually come back out to the public markets, make it clear that there is, there has been a change. So obviously we'll have new CEOs, you'll have a new chairman of the board, Adam Neumann won't be nearly as associated with the company. But I don't think an IPO is kind of in the immediate future for WeWork. I think there's still a lot of wood to chop to turn that company around. Is it going to be a 2020 topic, 2021? I think that's a little bit up in the air right now, but I feel like they've got more immediate concerns to focus on.
And it seems like as part of this nearly $2 billion severance package for Adam Neumann, it includes a $180 million consulting fee, which I'm sure many investors have found a hard time coming by right in the history of some of these severance and high-profile ties with companies. What does the board and the company of WeWork still need Adam Neumann for?
I mean, that's a good question. Obviously, there's a reason why they see value there in terms of paying him that amount of money to continue to advise them. I mean, he is, at the end of the day, him and Miguel, the other co-founder, they were the visionaries behind the company. So I don't know if they see kind of value in keeping him on there to, he's the person who kind of helps anchor the vision of what WeWork can be. Does seem like that vision is changing a little bit, moving a little bit away from the We company vision and back to its core WeWork capabilities. But that will be an interesting thing to follow over the next kind of few months or next 12 months to see kind of what sort of input Adam Neumann has in the company, given this kind of highly paid advisor role.
Right. How would you expect SoftBank to change WeWork, whether it's the business model or acquisitions or cutting costs? What can they do to turn the company around? I
think you hit the nail on the head with one of those points. I mean, cutting costs. I mean, I think there's going to be a dramatic cost-cutting effort at that company. A lot of right-sizing, a lot of downsizing in terms of headcount. I think the company had kind of ballooned from what the core business was supposed to be in the last few years. So I think they're just going to be trying to rationalize a lot of that. I think SoftBank as well. They're bringing in, as part of their deal, they're bringing in the SoftBank COO is going to become chairman. The co-CEOs of WeWork will report to him, and I think they're going to really take a hands-on role in terms of focusing on the core WeWork part of the business. As I said before, kind of moving away from the We company and back to WeWork, and kind of reining in some of the extraneous parts of the business, like the school, We Grow, and things like that they'd kind of forayed into in the last couple of years.
And we had heard that thousands of WeWork employees are anticipated to lose their job, but there was also some reporting that the company doesn't even have enough money to provide severance packages to them, and that is perhaps why there have not been broader layoffs up until this point. Is that right?
No, I can't speak specifically to the point about whether or not they didn't have enough financial resources to do those layoffs. I do know that over the course of my reporting, the timeline for when these layoffs were going to begin kept on being moved back. I was given a variety of reasons for that. And when you look at how precarious the financial situation was, the fact that WeWork potentially was going to run out of money, as soon as November, it does kind of make sense that they didn't want to undertake an expensive and painful restructuring before they had this financing agreement locked up.
And this is all much broader of a story, I think, than just WeWork and the We Company. What is this a commentary on? Is it the risks of the rental sharing economy? Is it the risk of overvaluing these high growth tech startups? What is the bottom line here?
No, I think it's really interesting, and I feel like that's one of the reasons why this WeWork story has kind of captured people's imagination, because it does speak to kind of, it's the peak of a lot of excesses we've seen build up in the system over the last 10 years. And I think, when we're sitting here 2029, we'll look back on WeWork as kind of the peak of a lot of things, peak in terms of private market valuations, peak in terms of, believing in the myth of the founder, in tech startups and giving them as much control as they want. And kind of peak in terms of supporting loss-making companies and without kind of having anything more rigorous around profitability. And so I feel like that's what WeWork has kind of become to symbolize, is the kind of excesses of things in the system.
What do we know about new leadership at WeWork and how capable they will be helming this company going forward?
Well, obviously they've still got their new co-CEOs in place. We'll see how long that relationship holds. But Adam Neumann and Sebastian Gunnigan, they're experienced guys, and they've definitely got a lot on their plate. Marcelo Clore, who's going to be coming in as chairman, is a very experienced guy and helped SoftBank with their Sprint investment as well. And I feel like he's going to be taking on a pretty hands-on role. And then I feel like this could potentially just be the start. I mean, we'll see what other managerial changes SoftBank decides to make now that they're kind of taking on kind of effective operational control of the company.
All right, that's Joshua Franklin from Reuters. Josh, thanks as always for your time.